All right, so I want to talk about a couple things. I want to talk about UPS earnings. I want to talk about this HIMS announcement, and I also want to talk about Spotify and Spotify's earnings, and what's happening to Spotify stock. It's kind of getting trounced on earnings, but I haven't even read it over yet. So this is where we're going to start. Um, HIMS shares of HIMS and Hers Health were headed for their best day ever early Tuesday trading after the health and wellness company basically teamed up with its competition, the maker of weight loss drug Wegovy. The San Francisco-based company said the plan was to make obesity care more accessible, more affordable, and more connected for Americans. The stock soared 34.9% in pre-market trading. It's on track to best the current record for a one-day gain of 31% set on February 27, 2024. I think since then it's come down a little bit. We'll take a look. The company announced a long-term collaboration with Denmark-based Novo Nordisk A/S, which makes Wegovy and diabetes treatment Ozempic, which are both approved by the FDA. Hims and Hers made its name by selling alternatives to Wegovy. All right. Starting this week, Hims and Hers members may be prescribed Wegovy starting at $599 per month through Novo Care Pharmacy. Ooh. Novo Nordisk U.S. listed shares hiked up 3.7%. In early March, $599. I don't know what, that type of medication goes for, but expensive, baby. In early March, Novo Nordisk had said it would sell all dose strengths of Wegovy for $4.99 a month through Novo Care Pharmacy. That came after Eli Lilly and Company lowered the price for its weight loss drug Zepbound to $4.99 a month for a 5 milligram dose and to $5.99 for a 7.5 milligram dose. All right. Hims and Hers said it was also developing a roadmap with Novo Nordisk as a way to increase access to care. Pretty cool. Pretty cool for Hims there. You know what I mean? Pretty cool. Let's take a look. So this is going to be Hims right here. It's up 27% at $36 currently, right? So that's not too bad. A big massive gap up, but still, if it lands the day up 20 to 30% on the day, as a Hims shareholder, man, I wouldn't be too upset about that. You know what I mean? That's pretty huge, especially since I bought some shares in the 20s. You know what I mean? Like, that's good for me. I love it. I love it. I love the collaboration. I love all that. Now, let's go to UPS. So UPS, now this is just an overall economic thing, but it's also a UPS thing, and I hold shares in UPS. Obviously, I'm a UPS driver. UPS releases 1Q 2025 earnings. Consolidated revenues of $21.5 billion compared to $21.7 billion last year. So a decline in revenues by about $200 million. That's not good. Consolidated operating margin of 7.7%, non-GAAP adjusted consolidated operating margin of 8.2%, and diluted EPS of $1.40, non-GAAP adjusted diluted EPS of $1.49 compared to $1.43 last year. So they did bring profits up a little bit. That was mostly, I think, due in part for, them gutting the company. Really, I wouldn't say they're really gutting it, but I would say they're really cutting costs really hard. So, how I look at that is just, we're a company. The more volume we do, the more money it makes. We're a low margin business. And they have not been running it like that. They've been trying to downsize completely all the way across. They're also really trying to automate a lot of the facilities, which I can understand why. They're going to cut jobs. I don't know how well that's going to work, in the short term, but in the long term, I'd assume it would lower prices maybe not lower prices, but it might keep prices right in the same ballpark as they are now, because you have to always factor in fuel cost. and maintenance of vehicles, parts, so many things, and these things that UPS cannot control. You know what I mean? Right? Anyways, Atlanta, Business Wire. Today, so UPS today announced first quarter 2025 consolidated revenues of $21.5 billion, a 0.07 decrease from the first quarter of 2024. Consolidated operating profit was $1.7 billion, up 3.3% compared to the first quarter of 2024, and up 0.9% on a non-GAAP adjusted basis. Diluted earnings per share were $1.40 for the quarter. Non-GAAP adjusted diluted earnings per share were $1.49, 4.2% above the same period last year. For the first quarter of 2025, GAAP results include a net charge of $83 million or 0.9 cent diluted shares, comprised of after-tax transformation strategy costs of $44 million and non-cash after-tax impairment charge of $49 million, primarily related to the asset and investment impairments. These charges were partially offset by a $10 million benefit for the partial reversal of an income tax valuation allowance. Carol said, "I want to thank all UPSers for their hard work and efforts in this very dynamic environment. As a trusted leader in global logistics, we will leverage our integrated network and trade expertise to assist our customers as they adapt to a changing trade environment. Further, the actions we are taking to reconfigure our network and reduce costs across our business, could be timelier or could not be timelier. The macro environment may be uncertain, but with our actions, we will emerge as an even stronger, more nimble UPS." Okay, all right. So your U.S. domestic segment was $14.4 billion. All right, and operating profit was $979 million, or a non-GAAP adjusted operating profit of just over $1 billion. And last year we had $833 million in 2024 with a non-GAAP adjusted operating income of $847. So, they've at least figured that out, got a little bit more profit on the table. Revenue per piece, which partially offset a decline in volume. Revenue grew 1.4%, driven by increases in air cargo and a 4.5% improvement in revenue per piece, which partially offset a decline in volume. That's my thing, is she wants to be better, not bigger, but we're a low margin business, right? Like, look at that, we're talking a very low margin for this company. We need to be pushing more volume regardless. You know what I mean? That's an issue. And that's why your share price is way down, way down. Now I get it. How can you comp against 2021, 2022 time? In 2021, 2020, UPS had some monster years, but we're no longer in that. You know what I mean? International segment revenue was $4.3 billion and an operating profit of $641 million, as opposed to last year in Q1 was $4.256 billion and then a $656 million, in profit, right? Operating profit. So your supply chain solutions, revenue didn't grow. Hold up. Yeah. Revenue was $2.7 billion with $46 million operating, and non-GAAP adjusted Q1 was $98 million versus last year $3.1 billion and $124 million in operating profit. And then non-GAAP adjusted Q1 for 2024 was $218 million, operating profit adjusted. So, when you look at that, that's quite a substantial move. So for the 2024 outlook, given the macro, the company is not providing any updates to its previously issued full-year outlook. Expectations for second quarter financial performance will be provided during the first quarter 2025 earnings call and webcast. So I'll take a chance to listen to that later. But UPS is getting cooked right now. I mean, I don't know exactly where it is. It's probably flat, I'd imagine, but the stock price has been getting cooked for some time. Let's see. UPS today. It's down less than 0.5%, $96.73. So it had a nice little spike at open, and then it's dropped down, and then it's coming back a little bit. Well, we'll see how it ends the day. I'm not, too excited. It's not a very exciting stock, it's just UPS, right? And then last but not least, I wanted to talk about one more thing. Spotify. Spotify is getting cooked too. So Spotify has released its financial results for the first quarter of 2025 today. Dun, dun, dun. Let's see. Well, let's see what they got on Investor Spotify at the shareholder deck. Let's see what we got here. There's got to be a financial summary of this. Okay. So we'll look at Q1 2024 versus Q1 2025. So your total revenue was $4.1 billion. It was a little bit down from Q4, but up pretty good year over year, 15% from $3.6 billion of last year. It would appear that your premium picked up more revenue and ad-supported tiers picked up revenue. Gross margins actually came up, which is beautiful. A little bit down from Q4, but up about 400 basis points from Q1 last year, from 27.6% to 31.6%. That's pretty good. Operating income went from $168 million in Q1 2024 to $509 million in Q1 2025, and up sequentially from Q4 2024 of $477 million. So that's pretty big. That's huge. Net cash flow from operating activities over double, 155% up. Oh, and by the way, operating income was up 203%. Those are pretty huge numbers. Free cash flow was up from $207 million to $534 million, which is a pretty good year-over-year increase of 158%. Now, sequentially, it was down 39%, which is kind of ugly, but you would like to think that they could continue to do sequential growth, but we'll see what comes up at the end of the year. I'm thinking that we're going to see a pretty big end of the year move. Who knows? You know what I mean? With Spotify offering a few other things in Q4 for discounts or whatever the case may be, who knows? Maybe there's more traffic on Spotify in Q4 versus Q1. I have no idea just yet. You'd have to listen to the earnings call and listen to the analyst questions, right? You know what I'm saying? We were pleased with our Q1 performance, or our performance in Q1, as nearly all of our KPIs were in line to ahead of our guidance. The business added 3 million monthly active users during the quarter, in line with our expectations for a seasonally small quarter. So Q1 is usually a small quarter, apparently, right? But they did grow free cash flow by 158%. I think Spotify is getting trounced at the moment, but that's pretty big. You know what I mean? You got a company that's still continuing to grow quite remarkably well. You know what I mean? Even revenue grew 15% year over year. Not too bad. You know what I mean? So subscriber net additions of 5 million significantly outperformed guidance by 3 million. Revenue was in line as premium and ad-supported outperformance was offset by unfavorable currency movements. Gross margin of 31.6% was modestly above guidance and reflected 403 basis points of year-over-year expansion. Operating income of $509 million was below guidance as gross profit strength and lower personal and related and marketing costs were more than offset by $76 million in social charges. Social charges were $58 million, and I believe that's in euros, above forecast due to share price appreciation during the quarter. As a reminder, We do not incorporate share price movements into our forecast since they are beyond our control. Free cash flow reached $534 million in Q1, bringing LTM free cash flow generation to $2.6 billion. Overall, we continue to view the business as well positioned to deliver growth and improving margins in 2025 as we reinvest to support our long-term potential. So that's pretty big. Let's take a look. Continued double-digit year-over-year growth in monthly active users and premium subscribers. So they grew at 10% to 678 million, reflecting year-over-year growth across all regions led by rest of world and Latin America. Premium subscribers grew 12% year-over-year to 268 million, reflecting year-over-year and quarter-over-quarter growth across all regions. This marked the highest Q1 net addition since 2020 and the second highest Q1 in Spotify's history. It's pretty good. Strong revenue and growth with sustained profitability improvement. Total revenue we covered that, 15% year over year, and total revenue grew 15% year over year. Gross margin finished, we obviously covered that, to 31.1% or 31.6%, which was a 403 basis points. We covered all that. I want to look at their share price though. Let's take a look. It might be an opportunity to buy here. You know what I mean? Let's see. Spot here. Boom. Wow. They're down $51 at 8.6% drop. A nice little gap down from the previous day. You know what I mean? Wow. I wish I could put in pre-market here. Let's see if I can't figure out how to do that. I'll figure it out next time and I'll add pre-market in. But nice little gap down. Not doing so well for Spotify here today, but you know what? It might just be a buying opportunity into a great company. If it continues to drop over the next couple of days or weeks or whatever, Spotify is one of those companies that's going to move up with the market. We'll see how it goes, you know what I'm saying? Anyways, that's all I got this morning.